Good afternoon, everyone. My name is Camille Shaw, and I serve as the project director for the South Carolina MBDA Business Center, which is operated by DISA Inc. Thank you so much for joining us today for today's webinar on Build Smart, Get Bonded, and Grow. Before we begin, let me give you a quick overview of the center. The South Carolina MBDA Business Center is partially funded by the U.S. Department of Commerce Minority Business Development Agency. We work with small businesses throughout the state to help them to scale up, build capacity, and grow. So this means we help you to identify opportunities and introduce you to resources to assist with resolving your problems. The purpose of today's workshop is to introduce you to a resource that provides simple, timely, and stress-free surety bonds through the SBA Surety Bond Guarantee Program. Qualified small businesses and contractors can get approved for bonds that may otherwise be out of reach. So before we begin, I would like to thank our partners for supporting us with this initiative. And our partners include DISA Inc., the U.S. Small Business Administration, as well as Foundation Surety and Insurance Solutions. Joining us today is Angela Brewer, the Business Opportunity Specialist from the SBA South Carolina District Office. At this time, Angela will provide us with greetings and tell us a little about SBA.
Thank you, Camille, and thank you all for having me. As she mentioned today, my name is Angela Brewer. I am a business opportunity specialist. I work with small businesses that are trying to get registered to work with the federal government. I help you get certified. If you're having issues with certification, I assist with that. SBA is based on the premises of start, grow, expand, and recover. When we talk about starting, we talk about we have resource partners. We have an SBDC, we have SCORE, we have Women's Business Center, and we have a VBOC, a Veteran Business Outreach Center. They can assist you with everything that you need from starting to growing to expanding your business. It's all free and confidential. They are partially funded by SBA, so the services will be free and confidential to you. When I talk about growing and expanding, that's where federal contracts come into play, or we have a loan program. We do not do direct lending ourselves. All our lending product goes through a bank, but SBA will back a certain percentage of that loan if you do not qualify for a traditional loan. SBA, you can ask about an SBA loan, and SBA will back 75 to 80% of that loan. And when I talk about recovery, as you know, we just came out of the pandemic a couple of years ago, and we were hit hard, or we here in South Carolina, we just experienced Hurricane Helene back in September, October timeframe. That is the only time that SBA would do direct lending. We have the EIDL, or the Economic Injury Disaster Loan. That loan product is the only thing that goes through SBA. So if you're looking for a small business loan to get your business started, to expand your business, all our loan product go through a bank except for when it's come to disaster or recovery. So if you have any further questions, my phone number and my email is on the screen, so you can reach out to me for questions about contracting. If you reach out to me about question about loan or bonding, I will have to transfer you to Frank Anderson. He's our lender relations specialist. He handles all our loan products. He's the one that go out and speak to banks. I can talk to you briefly about loan, but when it comes to the ins and out of a loan package, I will have to transfer you to Frank. Thank you all so much for having me. Have a great day.
Thank you, Angela, for today's support and SBA support of the small business community. Thank you so much. And there you have her contact information. So we've come to the time that you've been waiting for. Our presenter today is joining us from Foundation Surety and Insurance Solutions. Peter Gibbs is the former director of the Office of Surety Guarantees at the SBA headquarters in Washington, D.C. Mr. Gibbs retired from SBA after 32 years of services, and Foundation Surety is licensed in all 50 states. So Peter works closely with surety companies that provide over $9 billion annually in surety bond credit to small businesses. Please join me in welcoming Mr. Peter Gibbs. Thank you.
Thanks so much for having me. I know that you guys are very, very busy, so I appreciate you guys taking the time to come to this webinar. The only thing that I ask of all the participants on this call is I don't want you to leave here today without asking any questions that you have about bonding. So if you have any questions, I want you to type it into the chat, and I will try my best to answer any of the questions that you have. You know, before I get into the presentations, I just want to talk about the importance of bonding. You know, if you're a construction company, if you're in professional cleaning services, if you're in landscaping, some IT, you know, any contract, whether it's on the federal side, state side, municipality side, any contract that has a requirement for a bond, you know, we can help you here today, right? Next slide, please. So today I'm going to tell you what is a surety bond? Why are bonds important? I'm going to focus on the SBA Surety Bond Guarantee Program, and I want to tell you how to obtain a surety bond. I'm going to go over what does an agent like myself, what do we look at when we're underwriting an account? Then I'm going to tell you about, you know, the advantages of working with someone who understands the SBA bond guarantee program. And my gift to you guys is, you know, I've accumulated 10 tips that I've developed over my years, not only at SBA, but prior to joining SBA, I was a CFO of an 8A firm in Dayton, Ohio, and I also was a CFO for a larger construction company in New York City. So not only do I understand how the SBA Surety Bond Guarantee Program, but I've been on your side of the fence, and I know how difficult it is for companies to grow their company, and hopefully my tips will help you. And of course, you know, I want to be able to answer any questions that you have, right? Next slide, please. Just a little bit about me. We talked about my experience at SBA, but what I want to highlight here is, you know, in a couple of years ago, I was inducted into the ROTC Hall of Fame, which was a big deal for me and my family. And I want you guys to pray for me because I'm a lucky guy. I have 5 daughters, and my lovely wife is also on the call. I got 2 sets of twins, so please pray for me. Next slide, please. So these are some of the things that some of my major accomplishments at SBA, but the one I want to focus on is the one that's highlighted in red, which says that the SBA guarantee program, you know, had a 4% default rate and a 1% and a 1% loss rate. What does that mean? You know, I'm gonna tell you what it means to me. It means to me that when you're a small business, the only thing between success and anything else is the fact that once you get that project, once you get awarded a project, in most cases, 96% of the time, a small business is going to be successful. So what's in between you being successful is opportunity. And being a bondable company is going to make you put you on the path for success. Next slide, please. What is a surety bond? A surety bond is a 3-party agreement between the surety company, which I represent. So you have the surety company, and then the surety company appoints agents. So we are an agency, so we're appointed by the surety company, and the obligee / owner. An obligee can be the owner of a project, whoever you, if you're a prime contractor and you get awarded a contract. It can also be the general contractor. If you're a sub to a prime contractor, then that sub is considered the obligee. So you have the surety company, the owner of the project, and of course you, the general contractor. And the main purpose of the bond is to make sure that that project is completed by the contractor based on the terms and the condition of the contract. Again, a surety bond is very simple. It's a three-party agreement between the surety company, the owner of the project, and the principal. And at the end of the day, it ensures that that project is completed by the contractor. Next slide, please. Why are bonds needed? Well, if you're going after federal contracts, it is the law that every contract that is over $150,000, you have to get a bond, right? It cannot be waived. Now, if you're going after contracts outside of the federal contract, outside of the federal government, it can be from a private owner, it can be from a city, it could be from a county. Although it's not the law, most of these entities mirror that requirement. 150 is on the federal side, but we as a company, we provide bonds to companies that's less than 150,000. So whatever the requirement is from the owner to you to have a bond, it could be $50,000. You need to be in a position to take advantage of that opportunity, right? Next slide, please. Now, in 1970, SBA created the Office of Surety Guarantees, which manages the Surety Bond Guarantee Program. And the purpose of that office is to assist businesses who are having difficulties in the standard market, right? Difficulties can be, they may not meet the financial requirement, they may not have the necessary experience, but it allows a small business to gain access to bid, performance, payment, and ancillary bonds. At the end of the day, if you're a small business and you're not a bondable company, it's a major obstacle for you to grow your company, right? So with the SBA guarantee program, small businesses can qualify for bonds under reasonable terms. What does reasonable terms mean? Reasonable terms mean that you don't have to put up collateral. You may not have to put up collateral. You may not have to be under funds control. So you can get a bond without having to pay extra fees to get that bond. Next slide, please. The benefits of the SBG program. I just want to demonstrate to you what that means. If you're a business, and I'm going to say you're going after a $1 million contract, if you have adequate financial statements, if you have adequate working capital, and if you have $100,000, 10% of that $1 million, if you have 100,000 liquid cash in the bank, you should have no issues getting a bond. I don't know about you, but many of the small businesses, or most of the small businesses that I come in contact with, they don't have $100,000 liquid cash in the bank to get that $1 million bond. With the SBA bond guarantee program, because SBA partners with Treasury listed surety companies, and SBA guarantees 80 to 90% of that bond. What that means is the risk to the surety company is only 10 or 20%. So because of that guarantee, it encourages the surety company to take a chance with the small businesses. So because of this guarantee, SBA tells the surety company that they're okay with only 5% working capital. So instead of having $100,000 liquid cash, you can qualify for that same $1 million bond with $50,000 cash or working capital. Now it gets even better than that, right? Because in the standard market, if you have a business line of credit, that does not count towards the working capital requirement. With the SBA bond guarantee program, if you have a line of credit, the unused portion of your business line of credit can count towards the working capital. So needless to say, you can be a company without a lot of liquid cash in the bank, but if you have a bank line of credit, you can qualify for that same $1 million bond, right? So we have companies that don't have a lot of cash in the bank and they qualify for bonding. And that's a huge benefit for small businesses who are trying to grow their business. Now, the SBA Bond Guarantee Program, the maximum limits of the program is if for a non-federal project, you can get a bond up to $9 million. That's the max if you qualify for that bond. And if it's a federal project, it can go up to $14 million. And those are single limits. The aggregate really depends on how your balance sheet looks and the experience of your company. So, these are some pretty good limits for a small business, as you're trying to grow your company. The main point here is whatever you qualify for in the standard market, when you utilize the SBA bond guarantee, you can most likely qualify for double that capacity as a small business. Next slide, please. How do you benefit? It allows you to grow your company. It allows you to increase opportunity. And we talked about the flexible underwriting criteria. And as an agent, we evaluate your qualification based on the capacity, capital, and character of your company. I think there are some questions. Is there anything that I can answer right now?
One, just a little question. Can you get a bond in any industry, service firm, construction, manufacturing, or is it primarily used in the construction industry?
That's a very good question. And I would say as long as there is a requirement in the contract for a bond, it would qualify. So it doesn't matter what the industry is, as long as the contract says that there's a requirement for a bid payment or performance bond, you can qualify to get that bond. All right. Next slide, please. Qualifications, and if you're familiar with SBA, the main thing is you have to be a small business, right? You must be current on taxes. But if you have a repayment, and this is on the federal level, so IRS, right? You have to be current on your taxes. And if you have an agreement with the IRS and you're current with your payment, you would qualify for a bond guarantee. Of course, you have to pass the underwriting standards. You have to possess good character. What does good character mean? Good character means that you pay your bills, you pay your subs, you pay your employees, and there must be a need for a bond in the contract, right? You must be a U.S.-based for-profit business with legal resident owners. Recently, the SBA kind of changed their rules a little bit, so now we have to, if you're on a work visa, you don't qualify for SBA bond guarantee, but as long as you're a legal resident, you qualify. You must be eligible to do business with the federal government. You cannot be involved in a current bankruptcy proceeding, but if that bankruptcy is discharged, you qualify. The SBA, as far as criminal record, as long as you're not currently incarcerated or under indictment for a felony, you would qualify for the bond guarantee. The size of your business is based on the average 3-year annual revenue for construction, service, and supply firms. And if you're a manufacturing company, it's the average number of employees. Next slide, please. So it's very important that you as a small business don't do what too many businesses that we unfortunately reach out to us and then we have to decline a bond, because when businesses don't pay attention to being a bondable company and then they get awarded a contract. And in most cases, once you get awarded that contract, they may tell you, hey, you got 3 days to get a bond, 5 days, 7 days, or whatever. Now, if you don't have a relationship with a bonding agent, most of the time, you probably will lose that contract because it's not enough time for you to get that bond. The bonding, the getting qualified for a bond requires a lot of providing documents that may be difficult for some small businesses. So this chart kind of demonstrates everything that's involved in getting a bond. You identify a project. If you're going to bid on it, then you get a bid solicitation. If you wanna, then you have to submit the bid. If it's a contract that you negotiated, then you have to get the bond based on whatever you negotiate. And then the agent, we have to underwrite the account, and then we have to make a decision. If you bidded on a project and you got the results and you were awarded the contract, now you have to convert that bid bond into a payment and performance bond, right? So you have to submit a final bond application. And then you have to pay for the bond, right? There's no cost for a bid bond, but I'll say that I do know some agents who may charge a fee, an application fee for a bid bond, but most agents will not charge you for a bid bond. But if you get awarded that contract, you have to pay the fee. The fee that we charge, the premium is 2.5%, and then you have to pay 0.6 to SBA. So there's a 3.1% fee that you have to pay for that bond. And you'd have to pay for that bond before the bond is issued. The point that I want to stress here is you as a small business, when you're estimating a project, when you come up to your last figures or estimate, you should add 3.1%, because the way bonding works, that the cost of the bond is passed on to the owner. So when you submit your first pay application, you should include the cost of the bond, and the owner will reimburse you for that, right? So then we issue the bond, and then most people think, well, now that I got the bond, the process is over, right? But what I will tell you is most owners, there are things that are going on that you may not know about. The surety company, once they issue a bond, like every 3 to 6 months, they're going to send what's called a status report to the owner, just to find out how you're doing on that project, right? And because, if there are issues, we want to know sooner rather than later. And then if you, most contracts, there'll be some type of change order. So if there's a change order, you need to understand that when the bond amount increases, you as the contractor, you're responsible to pay additional fees for an increase in the contract. And the opposite is also true. If the contract decreases in value, then we have to reimburse you whatever that amount comes out to be, right? And then the job is complete. One thing that I want to stress here to the businesses on this call is, from this point on, whenever you complete a job, I want you to get a reference letter from the project owner or whoever you're dealing with. Reference letters are very important to agents, because it tells us that you have satisfactorily, completed projects, and then on to the next job. The important thing here to understand as a small business is that make sure that you have a relationship with an agent, submit whatever requirements they need so that they can tell you what limits they're willing to support, right? I'll pause for a second because we may have some additional questions.
Thank you so much, Peter. One question we have from Jazz Simmons is, how far in advance do you recommend establishing a relationship with a surety bond company? And you kind of just touched on it, but how far in advance, that was one thing. And I just want to let everybody know that the presentation will be shared, and we will share a QR code so that you can go to Dietz's YouTube channel and just look at it again and again and again at your leisure to make sure you get a full understanding. But yes, Ms. Simmons want to know, how far in advance do you recommend establishing a relationship with a surety company?
I advise our clients to get a bonding relationship as soon as they start their business, so they know what they qualify for. It's not something that you should delay, right? So moving on. So what does an agent, when we underwrite an account, what do we look for? This list is our list, but any other agent that you communicate with is going to be a similar list, right? The one document that's probably going to be the most time consuming is what's called a contractor's questionnaire. On that form, it's like a 6 to 7 page document, and we want to know everything about your company: when you were formed, what type of business you are, who were the owners, what kind of relationships you have with subs, with suppliers, what size program you're looking for, right? So we have the contractor's questionnaire. We want to look at financial statements, the last 3 years of financial statements. Mainly, we want to look at the balance sheet and the profit and loss statement. And if you're a newer company, I would say if you don't have financials, but you have tax returns, I will look at that. But I'll be very honest with you. If you're a company and you've been around for 5+ years and you don't have financial statements, it's going to be difficult for you to get bonded from any agent, right? So, make sure that you have QuickBooks or some type of internal accounting system where you can produce financial statements on your company. We want to look at your current work in progress schedule. We want to see what you're working on, what size projects you've done. And the point on the work in progress schedule is, if the largest job that you've ever completed is, let's say, $500,000, most surety companies will consider 2 times that amount. So we'll look at, a project. If you did 500,000, we look at a project for about $1 million. A lot of times I'll get a call and a company may have done 500,000 and now they're trying to get a bond for 4 million. It's going to be highly unlikely that you're going to get a bond. You're going to jump from 500,000 to 4 million. So keep that in mind as you grow your company. The point here is, it's not about where you start, but you should grow your company, based on your largest jobs that you completed. We also want to look at business and personal bank statements. We want to get your personal financial statement, resumes of owners and key personnel. If you're going for a specific job, I want to see a job cost breakdown, because I want to see how much profits are you going to make on that job. I know that there's a lot of people on YouTube telling businesses that you can make 40–50% on a job, but I'll tell you that the average net profit in the construction industry is about 14%, right? So if I see someone telling me that the net profit is 40–50%, I'm gonna really dig into that and find out how are you making 40–50% on a project. I'll pause again for another question.
Yes. The question is, are QuickBooks self-reports sufficient for financials, or do we need a third party prepared or reviewed financials?
That's a very good question. Yes, it would qualify you. I would tell you the rule of thumb is this, right? If you're going after projects that's 2 million and below, I can give you a bond with a good in-house financial statement. From anywhere from 2 to 4 million, we would require like a compilation. That means you have to get a compiled financial statement from a CPA. And anything over 4 million, we want to see a reviewed financial statement, right? So what's the difference between a good in-house statement and a reviewed statement? What I tell people, it's about $20,000, right? So if you're a small business and you're only going after projects that's less than 2 million, it's make no sense for you to spend $25,000 for an audited financial statement or a reviewed financial statement. So, you know, no, again, this goes back to having a relationship with a bonding agent and knowing what we would need to support your needs, right? We talked about the job cost breakdown. We talked about the reference letters from previous projects. And the key with the reference letters is once you leave a job site, it's very difficult for you to get a reference letter. So make sure that you get that reference letter while you're on the job site. And I also know that there are companies who get started. Maybe there was a superintendent or project manager working for a larger GC, and now they want to start their own business. For us, I want to see a list of completed projects that you've done with that prior company and what role did you play? Because at the end of the day, we have to make a determination like what is a good starting point for you with this new company, right? So if you were doing projects at 20 million for a large GC, most likely you won't start at 20 million, right? But at least we have an idea that you've worked on projects and the role that you played, right? And of course, make sure that your business line of credit is up to date, right? But the caution that I would say to the businesses on this call is understand that a business line of credit can help you or it can hurt you, right? Because if you have a business line of credit and most of it is used up, then that's viewed as a negative, right? When we're underwriting an account. So try to use a business line of credit, you know, like it's supposed to be used for. If you are waiting payment from an owner, you know, utilize your business line of credit, and when you get paid, pay that down on the business line of credit, right? Don't let your business line of credit be used up more than 60%, because then it becomes a negative, right? Next slide, please.
And while you're advancing to the next one, we have a question. What's the relationship between a surety agent and the surety company when it comes to getting approval for bonds, and how long does it normally take?
And that's an excellent question. So a typical relationship between a contractor, surety agent, and a surety company. The contractor comes to the agent, and the agent will collect all these documents that we just went over, and then we will submit it to the surety company for their approval, right? There are some, I'm one of the few agents or agencies in the US, I have in-house authority. So I don't have to go to the surety company to get approval on contracts up to a certain level. So anything under like 2.5 million, if I think it's a good deal, I can write the contract or I can write the bond. Most surety companies do not have that relationship with a surety agent. For us, once you're in our system, you can get a bid bond within hours of submitting the SBA Form 994 and a bid solicitation, right? Because we've already established what your limits are. We can get you a bid bond within hours. And we will FedEx it overnight if they need an original copy. If it's a digital copy, you can get it within minutes because we'll just email it to you, right? Once you get awarded the contract, as soon as we have confirmation of payment, then we will issue that bond. So I would say for bid bond within hours, for final bonds means that you've been awarded a contract. Within 2 days, we can get that bond out to you. Of course, there are fees associated with bonding. Like I told you earlier, For bid bonds, there's no cost. But there's when we utilize the SBA bond guarantee program, there's a contractor fee that's paid to SBA. So 0.6% of the contract amount, that's the contractor fee that's paid to SBA. And then the premium, we start at 2.5. But as you grow as a company, you have better financial statements, you've established a good relationship with me as a contractor, we will look at lower in the rate, right? So the average premium that a surety will charge is anywhere between 1.7 and 3%, right? If you're paying, more than 3.1%, I've had companies come to us and they're paying 4 or 5%. You're paying too much for that bond, right? And you should be paying around 3.1%. Next slide, please. So this is my gift to you guys, right? And this is from my many, many years of being at SBA and also being in the private sector. And this is from, traveling the US and meeting with contractors and these are what I think you as a business can do to make sure that you grow your company. Number one, hire an accountant as your first full-time employee. Maintain a strong banking relationship. Focus and excel in one trade. I meet a lot of contractors and they'll say, I say, what do you do? I can do everything. Trust me, that's a negative because the surety business is a risk business, right? So you should focus on one trade, start small and grow gradually, right? There are so many issues that can happen if you take on more than you can handle. And one of the biggest issues with growing too fast is having an inadequate working crew, because you're talking about if you get a large contract and you have to hire a bunch of people, you don't know their reputation. One of the biggest issues that I see with some contractors, especially on the federal side, number one, if you're working on a military base, you have to get authorization to get on the base, right? And if you have any of your employees who decide not to show up for work or even quit your company, now you're in a position where you may not have enough employees on that project. So it's important that you start small and you grow gradually. Develop a solid surety relationship with an agent. It's very, very important that you know what your limits are. A surety agent should tell you, hey, I'm okay with you doing single jobs at 500,000, aggregate at 3 million. Avoid venturing into unfamiliar areas when profit begins. When you start making profit, number one, you should keep the profits in your business, but don't go open a nightclub or buy a plane. Everything I'm telling you is these are things that I'm very familiar with. It's very, very important that you keep the money in your company, and also make sure that you're not making significant distributions at the end of the year, right? These are things that can hurt you as a small business. I know this is not a popular, my next point is not a popular point, because I know as small businesses, when you go to all these events, people, I hear it at every event that I go to, people are encouraged to joint venture and team with companies. I can tell you from someone who worked at SBA for 32 years, those types of relationship, they have a lot of issues, right? So if joint venturing and teaming is something that you want to do, make sure that you understand everything about that company to include looking at their financials, right? Because you don't want to be in a situation where being in a joint venture can destroy your company, right? I've had simple things like, I've had contractors say to me, Mr. Gibbs, I'm in a joint venture, and my joint venture partner, they have access to they're in control of the bank account. And I know that they got paid, and I'm waiting for my joint venture partner to pay me, right? So be careful with these joint venture stuff and teaming. What I tell my the businesses that we deal with is you can grow on your own. You don't need to get into those type of relationships, right? Understand your competition in the contract job cycles, right? Know who your competitors are. Understand when contracts are going to be, you have these job opportunities, but they become available like every 2 or 3 years. Make sure that you know when they're coming up and put yourself in a position to bid on those projects. Learn government operations before becoming an 8A contractor. Too many small businesses become 8A firms, and they don't even understand how the federal government works. And it takes them 3-4 years before they get their first contracts. Make sure that you partner with SBA and understand how that stuff, how does SAM works? How do I go bid on projects, right? And, diversify your portfolio. Make sure you have private and government contracts, right? Don't put all your eggs in one basket, right? I'm going to pause for another question.
Yes. You mentioned keeping profits in the business. Is there an annual distribution percentage, distributions divided by total profits, that raises a red flag for you?
So that's a good question. And what I would say is, if I see a distribution by a company and then it results in that company having negative equity in their company, that's a red flag for me, right? I had a company recently, they came to me, the balance sheet looked fantastic. A couple of months later, they came by, I noticed a $2 million distribution. It flipped their balance sheet into a negative situation. And I asked the owners, so why did you, take out $2 million from your company? And the response that I got from the contractor was, well, me and my partner, we built this company for 10 years, and we both decided that we were going to take money out to go buy a house, right? So now they put themselves in a situation where they became an unbondable company, because now their working capital is negative, and now the equity in that company is negative. So I would say to you is, make sure, if you're going to have a distribution in your company, make sure you sit down with your accountant and understand what is this going to mean? What is my balance sheet going to look like if I have a significant distribution from my company, right? Next slide, please. So, I know that businesses, when you're a small business, you get up in the morning and you do a search for training for small businesses. You'll probably get 30, 40 training opportunities, right? And not only training, but people want to charge you for services. They want to help you with your IT, with your HR. It can be very overwhelming for a small business. What I say to small businesses are, there are things that you can do that doesn't cost you anything, but will have a significant positive impact on your company, right? With a banker, with a bonding company. For example, when you submit an application for bonding, make sure the application is complete with accurate information, right? Because understand that this business is a risk, and if you submit incomplete information to an agent and they're going back and forth with you, it decreases your chances of getting bonded, right? So take your time and make sure that you answer every question. That doesn't cost you anything, but it gives you, it builds on that relationship with that agent, and also a banker, right? Consult your agent instead of guessing. If you're not sure about a question, call the agent and ask him, what does this mean, right? so that you're putting in information, because once you put something out there, it stays, it's hard to get it out of that person's mind, right? Whether you made a simple mistake, but you put them in a situation where they're like, do I actually believe what this person just said, right? So especially if what you put down puts you in a negative situation, right? So make sure that whatever responses you put, you know that you're answering what they're asking for, right? You know, communicate promptly with your agent. I've had calls from contractors and they're like, you know, I got this opportunity, and Mr. Gibbs, I need a bond. And I sent them an email. This is what I need from you as a company. And then they go silent on me, right? And then when that opportunity is close to being secured, then they reach out to me. And I'll be honest with you, it's hard for me to take this contractor serious because now there's been a silent period and I don't really know what's going on, right? So make sure that you communicate with your agent promptly. Work with a construction accountant, right? Make sure that whoever you're working with understands how financials are prepared for construction, for if you're a construction business, right? There's a difference, right? A lot of financial statements are prepared on a cash basis. For construction, it needs to be on an accrual basis, right? Build a strong relationship with your agent. Again, submit information to the agent so that you understand what your limits are. Too many times, small businesses go out there and secure opportunities, and then, you know, whatever connection they have, whether it's political, they know someone, they've been networking, they spend all this time going after projects, and then they get awarded a contract, but their balance sheet can't support the size of that contract, right? So it's important that you know that my balance sheet supports contracts at 2 million, right? And then so that you know that if I spend all this time going after this project, I'll be able to get a bond for it, right? Set up a bonded line, kind of like the same thing. Make sure you know what your limits are. And because at the end of the day, as an agent, I have to be able to advocate for you, right? And if I don't have a strong relationship for you, it's very difficult for me to advocate for you when I'm dealing with the surety company, right? And you know, like I said earlier, I can make decisions, you know, up to a certain level, but my goal for you as a company is to be able to continuously grow. And at some point, I'm going to have to go to the surety company and I'm going to have to advocate for you to get larger projects, right? And keep your financials current, right? If you're a company and your year end is December 31st, you don't want to be in August and you still don't have your financials done, right? You should have at least a draft financials by the end of March as a company, right? So make sure that your financials are up to date. And if you have a CPA or whoever you're working with to get your balance sheet and P&L up to date, make sure that they can get you that information in a timely manner. A lot of times I can't really approve a bond because it's August and this company, they don't have like interim financials. I don't know what their year end was. So it's very, very important that you could keep your financials current. So the whole point here is, you know, I know how overwhelming it can be as a small business, but if you take the time and do these things to help you as a business, you'll be in a better position to have a successful company, right? Next slide. I think this is it. So are there any other questions that I can answer? And remember what I said at the beginning of the presentation. I want you to ask me any questions that's on your mind. I don't want you to leave here without getting all your questions answered.
I don't see any more questions in the chat. Come on, ask up while the expert is on the line. Okay, I think we have a question coming in. Great, great, great. And we're going to have a polling question for everyone too in a few minutes, but let's see that question come in. Okay. Oh, we just had a comment. Very informative. Great, great, great. Thank you so much. All right. As a new business, how long does it take to qualify for bonding?
It really doesn't take long. I mean, we have companies, you know, and I like to motivate people, right? So I'll tell you that we have companies that came to us and they started off with bonds at $50,000. And now they're doing aggregate like 4 or 5 million, right? So it's very easy for us to qualify you as a company, but the main thing is to submit that package to us so we can evaluate, we can look at your resume, we can say, hey, I think that you should go after projects at 50,000, 100,000, right? And again, like I told you earlier, it's not about where you start, but it's about where you finish. And what I would say, one of the things that I would like to say to you guys is that we have over 600 clients that we work with. And one of the common things that I hear from experienced business owners is that they would rather focus on the smaller jobs because they find that they make more profit on it and they're quick turning jobs, right? The larger projects, typically they'll get a smaller profit margin and they're longer, and the longer the project is, the more likely that there might be issues on the project, right? So we have companies that just focus on projects like $400,000 or less, and they're doing like $5-6 million annually, right? So, you know, figure out what your niche is and focus in that area and grow your company from wherever you are, right? Getting you qualified is very simple. It's not a difficult thing.
That's great. That's great. Next question. Can you get bonding if you don't have much business credit?
Yes, I don't focus on credit, whether it's personal or business. Every relationship that we have, we sit down with them and I want to know about the person. I want to know about their goals. And I want to look at their experience and you know, and then we'll make a determination where we can help them. I know that's a good question because it makes me reminds me of something else, right? When you're a small business, one way for you to get surety credit is based on your credit score, right? And a trap that I see small businesses is they get bonding based on their credit, and there's a maximum amount. So let's say the maximum amount is 500,000. But if you're good at what you do, and let's say you get a job for 600,000, if you're not prepared for larger jobs, you probably will not get bonded for that job. So my advice to you guys is don't get surety credit based on your credit score. Submit that application to us and let's look at your company as a whole, and that's how you should get bonded.
Great. All right, next question. For the financials, are there particular ratios that you look for and the particular levels, quick ratio, current ratio, debt equity, etc.? And are there ranges of these you look for?
So what we look at is the number one thing is we look at the working capital of the company. And it's very simple. We look at the current assets and we minus the current liability. Whoever wrote that question, I can tell that they have an accounting background. They might be an accountant.
Yeah.
But I would say to them is, sometimes the balance sheet may look good, but once we analyze it, for example, if you have accounts receivable of $1 million, and then we get the AR schedule, anything that's more than 90 days, we're gonna discount, right? So it may show $1 million in accounts receivable, but if you have $200,000 in receivable just 90 plus days, that number is gonna be decreased to 800,000, right? If under current assets, it says loan to officer, we're gonna discount that 100%, right? So it's very important, again, to make sure that you have a construction accountant who can advise you of the impact of those things, because when I underwrite an account, I'm gonna discount stuff that I will consider and it's standard accounting practice that where they're gonna discount certain things under current assets. So it's not really a ratio, it's more of a, how likely are you to actually have access to that current assets, right? Because if you make a loan to an officer, most likely officers don't pay that loan back, right? So once we analyze the financial, it may look good to you, but it could be a negative financial statement.
Thank you. And one last question we have on here is, if your business is located in 2 states, what determines the state you should apply for bonding? Does the location of the business or the project determine the location of the bonding application?
It doesn't really matter if you're in 2 states, but the rule of thumb that I would tell you is, as long as the project is within 300 miles of your home office, bonding should not be an issue. Sureties don't want companies to be in New York and doing a project in California, right? We want you to be within a 300-mile radius.
All right. Camille, I don't see any more questions.
Well, thank you all. Thank you for your questions. Peter, thank you so much for explaining the bonding process, the underwriting process, the qualification requirements, and the overall bonding cycle. I have learned each time I hear you, I learn more and more each time. And I also want to thank Angela from SBA for explaining the contracting opportunities as well as the loan process and that are available through the SBA program. So again, we will send out the slides and the presentations to all of the registrants. And we just want to thank you all for taking the time out of your busy schedule to invest in your business. Thank you so much.
And I think the polling question, did we have that polling?
Yes, you should see a polling question that should pop up.
There you
And
go.
it's just gonna ask you if you would like a one-on-one meeting with Peter. And if so, we'll share your contact information with him and he'll give you a call or shoot you an email so that you'll have the opportunity to talk more about the bonding process. Thank you so much. If we can just keep that question up for a few minutes later, that will be great. Thank you again. Have a nice evening. Bye-bye.
Thank you. Thank you.